I will kindly request Mr. Daniel Mungai, kindly, if you can, introduce yourself, and then if you'd like, we can do a round of introductions also for for Sarathi, I can see on the call, and Safia, and then we can proceed. Thank
you. All right. Thank you, Andrew, and good evening, Safia and Sarathi. I hope that we are all in the same timeline. Good evening. My name is Daniel, and I am really, really excited and privileged to be in this conversation. I am a business strategist. My background is in agribusiness. I have worked in the East African market, mostly supporting market entry and business development and commerce. I'm currently the country commercial head for Home Biogas, which is an Israeli entity that focuses on renewable energy, mostly renewable energy access to farmers, mostly livestock farmers. We do product development all the way to last mile distribution, and we have had a good success in the Kenyan market and in some East African market, in Rwanda, in Ghana, and I'm really, really privileged to share today about partnership and how we can leverage on partnership to be able to do business development or also scale. So thank you very much, and looking forward to interact with all of you and to learn. Thank you. And I'm happy today to be able to discuss with you about a partnership, which is one of the biggest lessons that we have learned. Even as we scale today, we have different business model that mostly focuses on mostly focuses on customer revenue and also carbon credit. It's an innovative model that we've developed over time, but it has come a long way in terms of engaging partners. We work equally with the financial partners that directly finances the clients. We also have a part of insurance in the process where the biodigester itself, the animals themselves are also insured. But mostly the key partners that we work with are mostly the financial partners, the aggregators, the farmer organizations, the processors, and I hope that this session will bring some good insight. I'll try to share as much as possible about my experience, because I believe that is the most important aspect in this presentation. I think you can feel free to either ask in between, or we can go throughout the presentation and then we can have questions. So I understand that we probably are in different level of business growth. Some of us might be at the early stage. I know some of us are at scale, but partnership, from my experience, is a critical. I would actually consider it as a critical part of a business model. From my experience, businesses will definitely require strong partnership to really, make impact, survive, and also create impact that can actually be felt and something that can be long-lasting. So from where I see it, partnership is a critical element. Actually, I consider it as a business model that when you're actually developing your business, you should ask yourself at what point and what are the critical partners that do I bring on board? And maybe one of the most important questions to ask ourselves is whether we have been in a situation where we have experienced or we have seen either a product or a service that has been introduced in the market that actually get a very high acceptance. And when you look at that, behind it, you will find that partnership has been a very key aspect. Because if you're actually building your business, you might have very good product, you might have very good solution, but what scales or brings your business to acceptance or actually reaches majority of the customer, you will be surprised to realize that partnership is a key element of that. So, and what partnership brings in businesses is very critical, as we will be able to see today as we actually discuss some of the element. But for me, one of the most important aspect of partnership that I believe that brings on board is actually trust. And most of the product or solution that get high adoption or even high acceptance in the market, one of the key factor that I have observed is trust. And trust comes from familiarity. Trust comes from if I trust someone or if you trust someone, there must be a connection or a reason why you trust that person. And most of the time when you look at, for example, in my space where I work with farmers are the end users trust their organization, their producer organization, their marketing organization. They trust the leaders. They trust the people that they know. So they actually trust, even in terms of product referral. You'll find that a customer who refers another customer becomes an easier sell for you because it is actually built on trust. So when you're looking at a partnership, it is very important because once you nail or work with the right partner, it actually gives you very high credibility and trust that can actually accelerate you and accelerate your growth in the market. The other aspect and the other things that make me believe that I know that partnership is very strong is that you can actually leverage on partnership. And as we continue, I'll give a few examples of what we have been able to achieve, mostly from my experience, what we're able to achieve is that partnership can also give you leverage and also ensure that your business is sustainable. Of course, it comes with aspect of shared cost, shared revenue. You might not get as much revenue as you'd actually get if you're going alone, but it also comes with shared risk. And this is also one of very important aspect for businesses, as all of you know, that the risk mitigation is a critical aspect for a business survival. So being able to identify the right partner that can actually help you navigate risk and also increase your revenue, it can actually help your business grow in a very significant way. Number two, and the other thing is that a partnership also enhances competitiveness. You become more competitive. Of course, as I said, it brings trust and credibility. It also gives you ability to be resilient, in the market. That means that you can be able to either be competitive and also enable you to stand tall, maybe among your competitors, because partnership will take you to a different level. And it's also help you to drive innovation. Sometimes you get into partnership and there are things that you never thought about, and you even get a very strong push from your partner. It helps you to learn. It helps you to learn from outside. Sometimes when we are also in the business as entrepreneurs, and you're actually looking from inside, it's sometimes difficult for you to see the outside part. And I know entrepreneurs, I'm also an entrepreneur, we are definitely consumed by our visions and our goals. And having a third other person that gives you another perspective becomes very, very, very critical. So for me, I believe partnership, and I'll give an example of, for example, what we did. When we initiated an organization here in Kenya, and we are selling a product that is, I would say, have high investment cost. For example, a one product solution for biogas for a farmer, normal farmer would cost around $700 to $1,000. This is a very, I would consider it a high intensive capital intensive investment for a smallholder farmers on that level. And as much as the product is actually ideal and it's needed in the market, it was very difficult for the customers to uptake this. So the first thing that we're supposed to do is to look for customer financing. And the obvious partner that we would actually think of were banks. So we approached banks, financial institutions, the banks, the SACCOs in the minimal. We also had a lot of expectation with the SACCOs that worked actually with the farmers. But this did not work. I mean, it was very challenging for the financial institutions to actually appreciate that opportunity. We saw it as opportunity. We packaged it as an opportunity, but there were definitely some aspects that made this not very favorable for them. That as we will see, and this did not fly. So as a company, we had to innovate around financing. And one of the risky things that we had to do was to provide internal financing, which means that we we had to source for financing and actually do internal financing, which means that we're actually financing the farmer directly internally. Now, this was very challenging. I say it as an example because we actually putting two institutions together. Your sales vehicle as institution sales, and also doing financing, and also brought a lot of conflict even internally in terms of how do you handle the two elements. But this being a lesson that we actually learned is that when we did this for 2 years, it was actually very difficult for us even to scale and to move fast because we already carrying a very heavy burden of product sales, after sales service, and also collection. So we had to also innovate around it and look for partners. So one of the things that we did to actually succeed was to look for more aligned partners that would actually share the vision that we had. And this takes me to the next level of how do you identify the right partners. If, for example, I'll give example of the banks and why this partnership did not work for them. Even now, we're still struggling. They come, they look at it and they're not able to move on. And there are some of the things that we learn here that they're not able to move on with it, even though some of them express a lot of interest. We do quite a high number of farmer financing. We do over 3,000 to 4,000 farmers are actually looking for financing directly. And this is an opportunity that banks can actually leverage, but they're not able to leverage. One of the challenges that we saw with the bank is that this was not a strategic business for them. When you look at the value, or actually the size of the loan for the bank, it's not interesting. They look at it as a very small element of their business. And also they are also managed by Central Bank of Kenya. Of course, there are other regulations that they must be able to manage. For example, they are supposed to create a product. So there was some strategic misalignment. And when the banks and financial institution at that level looked at this product, they actually were not able to move on. As much as it is still very potential for them to actually even onboard farmers as customers, as basic customers. And this could also be an opportunity for them to do that. It has been very challenging for them. And one of the things that I see is that makes it difficult for them is that it's not a very strategic fit for them in terms of how they perceive business. They look at bigger business sizes. They perceive this level of business as low. And some of them somehow have not been able to figure out probably how they can make it more attractive. The other thing is, of course, when you're looking at partnership, is that you need to look at the strength. What is the strength of the other partner that you really want to bring on board? And I want to believe partnership is about being able to leverage. It is being able to leverage. Actually, I say it's being able to give out part of your job that someone else can do better than you. So, or someone is actually better than you can do, because I believe what we do in partnership is actually leveraging on other partners to help us do what is ideally our business. So when we are looking at actually a partner, and mostly in our case as a financial partner, we're also looking at does this partner complement? And when I look at this kind of partner, for example, in this case that I give, definitely yes, because by the time we are doing 2 years, third year, we were already overwhelmed. It is not something that was sustainable anymore. And it has been a struggle even to bring on board those financial partner. But finally, we were able to match with the financial partner. Surprisingly, it could be a partner we could have ignored from the beginning. They might not meet all the structures and all the good things about financial capacity and everything that makes a very good financial partner. But what we found in this partner was alignment in terms of their goals, that they were they were actually designed to be able to finance personal assets and also finance along environmental and climate change. So what we managed to do, we onboarded a few. They were basically microfinance institutions, But these financial institutions were very, very innovative. They're able to review and able to align with our business model and also operation, which is also very important, as we will also see. And along the way, we've been able to find partners that can be able to align and be able to work toward our strategy. And also this also aligns very well with their strategy. They're definitely they see strength. All of us see strength from each other. They're able to get businesses from us. We're able to get direct business from our end, and also from our end, we're also to get this support of financing the farmers. There's need to, of course, to have shared values and goals. Some organizations have different way of how they values and how they see aspect, and even how they see the customers and the business. Sometimes you might discuss, and again, it's also for me in the lessons of engaging with financial partner also, I found businesses that never had the same values that we had. We have value of, we are customer centric. We really want to develop solutions that are customer centric, that can actually that brings a real impact. But along the way, we still found some businesses that were still on business as usual, right? They just focused on revenue. They just focused on business metrics. And you find that it is very difficult to align with these businesses, because when companies or organizations like us, sometimes we even call back a product, we would actually replace a solution, and definitely this has cost for business. In a situation where you have no shared value, in a partnership, you might find it very difficult in terms of customer satisfaction, and finding that your partner does not really value, does not put as much effort as you do to be able to ensure that your customer base or your business trust that you want to really keep in the business is onboarded. So it's really, really important to be able to evaluate the values that your partner has. Of course, the strength of the company is important, because, as I said, you're actually putting part of your business, you're delegating it, if I may say so, to another partner. So in a way, your business relies on other partners to some extent, and also depends on how much what you have actually delegated means to your business model. Reputation and credibility goes along with trustworthy and transparency. The kind of partner that you're actually partnering with can determine your success or your failure. So if when we have seen businesses, even small businesses, attaching with bigger brand, and the product have very high acceptance in the market. So the credibility and the trustworthy of the partner, and also the product, sometimes when I look at also the partnership that I have been able to create, and the partnership I've been able to create, majority of these partnerships also work because of the trust that the partners also have on the product or the solution that you have. So how much does the partner that you work with trust on the product or your solution? How much do they trust that it does what it does, and it also doesn't affect their business? Because that's also other aspect that also you see with partners, that partners are very careful to onboard either it's a new partner or a new product, because if this product does not work well, does not have good result for their customers, at the end of the day, it has negative effect on their business. So you really need to work on reassuring and creating confidence on the other partner that what you are actually selling or providing as a solution works, and it actually delivers what you promise to deliver, so that this also remains as a promise that also stretches to their customers. The other aspect, of course, is scalability and growth. So you want to partner with a partner that can actually take you to the next level, right? You don't want, it's not interesting to really engage a partner that does not make you move to the next level. So when you also look at the partner that you're on board, are you asking yourself, can this partner help me move with me in the next level? Or if not so, can they move with me to the next level? Or if I really need them to actually scale with me, or whether it is business expansion, whether it is growth, whether it is upgrade, whether it is technology, are they able and willing to scale and move with me to the next level? And of course, The other aspect should be mutual benefits. This, I believe, is one of the most important aspect of a partnership. Does the partnership brings mutual benefit? Because most of the time, when you are entering into a partnership, from my experience, every partner really needs to know what is in there for me. What is in there for me as a business, and how does this partnership create value to me as a business? So if when you look at the two businesses and you do not see either mutual benefit from your end, that you are not able to see a benefit that you get as a result of partnering with a certain partner, or the partner does not see benefit, I can guarantee you that the partnership will not really fly, because what keeps the partnership sticky and moving on is every partner being able to achieve the objective, and every partner being able to achieve their deliverables as they actually are. So being able to see that from the beginning, before you even establish or initiate partnership, is very important. And this definitely helps you to be able to align and understand how does this partnership create more value for me, and how does it create more value for my partner. So that basically what I believe we need to do in terms of identifying the right partners for the businesses. And I will give an example of as we go to building a win-win structure. An example of my experience when we started operations here in Kenya. Initially, we were our global organizations do business to business model, meaning that we work with the distributors, across the world. And in Kenya, we also worked with a distributor, well, actually one of the biggest agricultural distribution company on seed irrigation. And our product was among the product line that was actually being distributed by this partner. And personally, I joined then to be as an account manager to support the distributor as a partner. And the moment I started working and just looking at the partnership, I realized that there was one very big misalignment that was there between the two businesses. And this misalignment actually was along the business model, because this partner, the distribution channel that the partner uses to date to actually distribute product is through agrovets and resellers in different areas. And the product that this partner had been asked to redistribute required a different channel. This product would not be distributed through the normal distribution channel, because it's a high, as I said, it's a bit of high investment product that you cannot stock, in an agrovet or in a normal reseller, in the nature and the size of the reseller that they actually used. It cannot be, sold from that point. The other sales channel was through big farms, big commercial farms that purchase bulk. Again, the product was based for domestic use, so again, it's not a fit for this level of clients, and it was very problematic. It actually was very difficult for this partner to actually distribute this product. They tried to create different channels, but they were not expert in it. They were not able to actually distribute or even maintain the product, again, because also the product require after-sale service, for example, and the product they are dealing with do not require such kind of a service. So there was a complete misalignment, and at the end of the day, they actually surrendered. They said, we cannot do this anymore. So one of the other aspect and most important aspect when you're actually working on building a win, or you want to build a long-lasting and successful partnership, is actually to ask yourself whether your business and the partner business align, mostly on the vision and the goals, and also on the business model as well. So does it really fit? Do we have the same vision? Does my product or service align within their distribution model or within their normal business model, or do they require to innovate or to develop a different channel for them to actually be able to distribute my product, which is problematic, because generally I say every business, like if you're looking for a partner, you always have a scorecard, right? We'll see about the scorecard today. You do not just onboard to any partner. So you have expectations about a partner. So in real sense, you're looking for a partner who is strong, who can help you scale. But there is no partner who started business to help you do business. Every partner started business to actually excel. So when you really come in and you want to partner with them, you really need to ask yourself whether your business and your product really fits in their business model. And if it's not, and probably they are not willing to put effort, it is likely that your partnership will not prevail. It will not fly as much effort and support that you actually put in this business. You need to define the very clear value exchange. Yeah, what is the value that I bring? I think I talked about that already. It needs to be very clear, and you really need to ensure that this is well understood and agreed within the partners, and also appreciated. For example, I'll also give an example of a partnership that we also just closed recently with one of the biggest milk processor in Kenya, that has access to over 60,000 small-scale dairy farmers. And how we really had to structure this partnership in a way that it has very clear value to the processor, because the processor, I mean, for me, I believe this is the first time that they actually did this kind of a partnership. The processor need to see the value. And when we looked at the processor, and maybe I'm sure all of probably here we know, what is the biggest challenge of a processor or of an off-taker is is consistency. It's consistency of the product. They have already invested in processing unit. They really require to have the raw material delivered to them. So one of their biggest challenge is the consistency of product availability. And how do they use the partnership to actually solve their challenge? So one of the strongest proposal in this case that we gave them was, if you allow your farmers to access or enable them to access this product, I'll just give an example of the product because I think this is, I won't believe it aligns. If you allow a farmer to access this product that we're actually distributing, that they're actually interested to buy. Of course, we know the biggest challenge is either awareness or affordability. Then you can actually stick this farmer as long as you provide credit, because part of the agreement is that they also extend credit to this farmer and do a check-off system. So you can extend credit up to 12 months, as much as you want. But also, when you extend credit within 12 months, you also, stick the farmer. You get the farmer loyalty, but you also stick the farmer within your distribution or your supply chain. So, and this was very exciting. So when you look at the partner, the biggest challenge that he has to actually stick the farmer can be solved, not entirely, but part of it could be that once the farmer gets a solution that comes through them, that is also financed and facilitated, the farmer will definitely be loyal and also stick to this supplier as a processor for as long as, probably they finish this payment, or maybe later, depending on how much they're able to keep the partnership. So from my experience, this is something that has really, really created a lot of value. Looking at the ideally dairy sector, probably in Kenya and maybe in other places, that there's a lot of competition on the milk supply, because majority of them are, of course, have invested, are probably operating under capacity in terms of processing. So this becomes one of the biggest headache they have. And this partnership, creates direct value to them, in the sense that if it goes well as intended, it is going to save them, a lot of resources and a lot of headaches in terms of creating the value that they actually require. Of course, from my end, we can see the direct value. We have access to leverage on this audience that they have. We actually comes also with a double benefit of financing, that we also don't have to struggle with financing, because the farmer can actually get financed by this partner, and also the collection goes to the partner as well. You also need to establish trust and transparency. This I think I already talked about. Some partnership takes long. I'm sure some of you have probably already pursuing partnership, and they take long. Sometimes they take months, sometimes they take years. And mostly it is about trust sometimes, and the partner, as I said, need to be very sure that whatever solution they onboard from you or a product does not have a negative effect on their business, because they have created time to build businesses. I'm sure you know how difficult it is to build a business. So when you're actually onboarding a partner, you really need to be sure from your end, also from the other end, they really need to be sure that the product work, that you can actually be relied, that you are a credible organization, that can actually that they can be able to work together with you, or even be able to introduce you to whatever channel or whatever function of your business that you have actually delegated to them. You need to build strong governance and structure that manages partnership. One of the I think one of the myths that I've seen with most businesses is thinking that partnership is there to do your job. That once I nail this partnership with this aggregator, with this partner, I'm good. This is not the case. The partnership requires a lot of effort to really, manage, establish, grow, manage, and even take partnership to a successful level. It requires a lot of support. And part of my success to, partnership that I've done before, including the one that I mentioned about the financial partner that we onboarded, not one, a few of them, is that we're able to structure a very strong committee or group within our organization that has very direct connection with the other partner. Because when you're working with partners, sometimes there are many things that are misaligning. Your business operation, their business operation, your team, their team. And being able to create a governance or a structured way of engaging in terms of appointing who is responsible for this, and establishing a very clear and continuous communication channel that the partner is very comfortable and willing to actually channel, whether it is feedback directly to you, is very important. Because some of the things and some of the partnership that fail, most of them, I will say, most of them fails along execution, fails along communication, fails along misalignment. And you find that you establish a partnership, you did a lot of work to really nail this partnership, but it doesn't give you the desired result, because the work that was supposed to be put in, that start from how you communicate, how you structure your team, and how the team of the other partner is structured, and how collaboration between those two teams happen, is not really aligned, and this creates conflict. Remember, most of the time, the heads, the CEO, the director of operation, the director of commerce, you initiate partnership, but you are not the person that do everything all the way to the end. So how do you share that vision to your team? How is it received by the other partner? And how do you actually align your processes is very important. And of course, mostly at the level where we are and where you are, it is to actually focus on relationship. I find that I spend a lot of time, either talking, engaging with partners, and it actually stops being a transaction aspect. It becomes a relationship issue. Even now, when you have conflict, it really doesn't appear as as I would say, a business aspect. It actually becomes like a relationship. Most of the time, I also find even my partner really giving me feedback as advice, which I really appreciate, right? It becomes a relationship. It stopped being transaction. It stopped being just that partnership that you have for business, but we have actually grew it into a relationship. So when you're also looking at that, how do you humanize your partnership? Because a partnership is between an organization to an organization, but these organizations are run by people. These partnerships are run by people. How do you humanize your partnership so that beside the challenges that you have, because every partnership has a challenge. I'm not saying that you might have the perfect product, the perfect solution, but this does not mean that you will not have challenges, you will not have feedback, you will not have issues in the partnership. So how do you really manage to address these issues? It is through humanizing in the partnership, and this is getting to know and to really create relationships with these with these organizations, with these heads of organization, with these people that are creating, and really being very intentional about aligning the organization values, your values, their values, and also the people that are there. So this aspect are things that I've seen from my experience, creating helping us build a strong partnership, whether it is in the commercial aspect, the private sector, in the non-governmental sector, even in the government. We're also working with government partners, and these have been some of the aspect that I see, and from my experience, I've seen as very critical in terms of creating a win-win structure. So I want to pause there before I move on to the other slide, so that if there's any question or anything that you want to share or clarify, maybe we can handle it at this point before we move to the other slides. If there's any question, anything to share, could be a question, could be something to align with.
Hi, I have a question. Maybe you plan to address it somewhere downstream. But do you have like a tool, like a partnership matrix that you have that we can use either to either educate ourselves first, secondly, bring all our team members on board in the company's strategy around partnerships? Then it can be used also as a tool to onboard any other third-party auxiliary member who works with us along the value chains that we work with. I don't know if it's something you plan to do for us, if it's available.
Yeah, that's a very good question, Philip. So within this session, we wanted to come up with a partnership scorecard, which I believe the partnership scorecard is a bit different from from the implementation part of it, because this will help to address mostly partnership identification and maybe partnership closure. But that's also something I believe that I can also support in developing. I thought it's not covered in this session, but it's something that I can help to develop and share as follow-up information.
Okay, thank you.
I want to skip one and just also go through very fast on why a partnership fails. There are very common mistakes that partnership fails. As I said, I have failed in quite a number of them. I have established some that never worked. No matter how much we did very good scorecard, we actually mapped the partners, engaged, and even tried to develop some engagement strategies. But they didn't work. So definitely, when you are engaging a partner, you need to ensure that there is no conflict, whether of any conflict of goal or strategy. So if you are engaging a partner, it's very important to look at a complementary partner, because if you have a partner that might eventually see or just see a benefit from your aspect of business, or there could be some conflict in terms of business goals, then it will not work, and you have a bit of lack of trust in the business. No one is really interesting and fully open to the other partner if you see the other partner as a threat in any way. So you really need to ensure that any partner that you engage and really evaluate that does not have any sign of a conflicting interest, because trust, as we said, is what builds partnership. And if there is no trust, it has become very difficult either for you or for the other partner to really collaborate with you. Not being very open. Sometimes you might enter into a partnership, or the other partner does not put everything on the table. From the onset, there's no clarity, and the communication is not very clear. So at the onset of any partnership, I think it's very, very important, even before establishing it, to really align on the goals and the agendas. And as I said, everyone is in partnership for something. So let it be very clear. What is it there for you? What is it there for us? And do we really agree and align that this objective and these benefits are good for us, and we really, really appreciate them as they are. Not being able to align with operations, the other partner operations. So every organization has its own way, the way it is structured. It has its own model. The way it works is a machine. So if you are not able to align with that operation, or within the partnership, within that group that you create, the governance structure, you are not able to align your operation with the other organization operation, then that partnership will not work. And I can give an example of a financial partner that we already partnered with. Very good partner, very quick. I would actually say is the best in terms of processing financing and assessing and appraising and paying us, very fast. But when we did this partnership, they never went to actually align the operation process. So there are some aspects that we changed because of the way we engage customers. For example, the customer pays deposit to us, doesn't need to pay deposit to you. So if the customer pays deposit to us, how do you recognize that as a deposit on your end without that money being paid to you? So, this is something that we're not able to go and adjust in their system. So yes, we say everything is good on the paper. We are on, we give them a business. The moment there are people on the ground tries to enter this in their financial system, then it demands a deposit. It says something is missing. And this is something that we already discussed earlier. So they were not able to adjust their system to say this product that we have actually onboarded as a partner, we treat it different from maybe other financing that we actually do. So this is something that have not, they have struggled actually to work with for the last, I think, 12 months. And it goes all the way to the fact that this partner has not been able to align their processes, so that whatever aligns and whatever works for us, how does it also align and work for them? And this has been very problematic. And I would imagine, like, for the last probably 6 months or 1 year, this is something that we have not been able to kickstart with them as much as they could actually leverage on the business that we have. The other thing is also not being very careful about not putting a keen eye on the credibility of the partner. We said that credibility and trustworthy is very important. If you are partnering with an organization, it's good for you to know that this organization features in many of your aspects, even in your transaction, probably in your bank account. So anything that is not very creditworthy or that might work negatively for your business, it's very important for you to really align and ensure that you are actually partnering with the right partner. Sometimes it's good to walk alone that walk with the wrong people. So it is important to ensure that you are not overlooking. You are very keen on how credible and how trustworthy is your partner in terms of doing business. And lastly is to expect that the partnership will do everything for you. This is, as I said, is one of the biggest challenge I see with establishing partnership. And from my experience, and mostly looking at businesses that works with the farmers, most of these businesses sees cooperatives or farmer organizations that are doing aggregation as the savior for them. And true, if you have access to an aggregator or a farm organization that have access to hundreds of thousands or even millions of of farmers, it's definitely a very big win, because you really leverage on this audience, and it can really give you a very big mileage. But it doesn't. There's actually a myth that people think, most of the businesses think, that the moment you do that signature, you sign that contract, your problems are done. And this is one of the problem, that partnership does not come to fix all your business challenges. It will help you to leverage and also to move faster. But there are still a lot of elements in your business that need to be looked at, and specifically that partnership itself, because as we said, if it doesn't go well for you, even for your other partner, it might also affect your business. So it is very important for any business, or for you as a business, business owner or a business leader, to really don't take a break. I don't think, for me, closing a partnership does not mean taking a break. It means actually putting more focus on that partnership, because it also requires time, and it requires effort, and it also requires a lot of support, even for the team and the structure. So looking at partnership stages, forgive me, you didn't edit this. We have different level of stages of partnership stages. I'll just mention them lightly. I know we will just we can look at them very fast. And also depends on your business. So from where I sit, I believe that there are big companies and big institutions that do not hustle for partnership, right? People chase them for partnership. And of course, this is what we create in the business. Like, we have more visibility, we have more muscles, we have more leverage in the business. We will have invitations for partnerships. Sometimes you have to look for them. Depends on where your business level is. And it takes time to build a business that attract partnership. So most of the time you'll find yourself chasing partnership. But of course, at a high level, you will also start getting partnership requests. So for me, I believe it's a matter of growth, organizational growth, and how you grow. So the most initial stage is where you are at the beginning level, right? You probably might not be very attractive to many partners that might be important to you. There are those partners that you would really want to partner with them, but they don't really see your organization as that organization that can give them leverage. As I said, everyone is looking at what complementary do you bring to my business, and it's also happening on the other end. So at this point, you become more of a receiver. Sometimes you might even find doing yourself what we call gentleman agreement, right? There's no formal agreement, and you really want to close something that can give you a leverage. So this is something that is also acceptable. It depends on the level of the business where you are. That sometimes you might find a partner, not very big, but it's a fit. It's something that can also give you an initiative, and it can also explore and help you learn how to manage partnership, which I believe is also very critical. And as much as it's not also a very big partnership, that because also a big partnership that have bigger requests or require you to deliver, because partnership also comes with expectation. So if there are a bigger partnership that you cannot also be able to handle, this also can bring a lot of conflict and also a lot of issues with the organization, because it also stretches your resources. It can request make you to demand you to maybe even expand, maybe to invest in in things that you would ideally would not do. Probably even make you move faster than you'd actually organically grow. So it's an important aspect of exploring a partnership. Then of course we have most of the structured ones where there's a very clear commercial angle that you probably be at the same level with the organization, might be slightly higher than you, but you still have you can still attract some level of you have a level of attractiveness for you as a business, and it also have a very clear commercial aspect. And in this case, you also find that at this level you are able to see clear value in terms of your business, see clear value in terms of the other partnership business as they actually mean to you as an organization. Then we have a little bit higher level where when you look at the business, your business and the other business, you have very, very strong strategic alignment. It could be that your business model completely complement each other. It could be that you can be able to develop new aspect or explore new opportunities within the same business. It goes beyond just commercial aspect and the direct value that you can derive to a little bit more advanced engagement where this partnership can actually support your business even in terms of product innovation, even in terms of business expansion. So it actually brings a more bond, has a more stronger bond than just any partnership that is based on on the commercial aspect, or also on the revenue or even the value that actually the partner brings to you. And lastly, the highest level, of course, is the alliances. These are very strong bond that most of the time you'll find businesses bring this kind of partnership over years. These kind of businesses have long-term shared goals. They have long-term shared visions. They align in many aspects in the business, but also even aspect beyond business, where you'll find alliances and businesses embedded on other aspects. Things like sustainability, business responsibilities and co-shared values. This kind of partnership also can actually also goes to agreed or even aligned investment, where business can decide to combine the solution and even explore probably new markets, explore expansion. And I would say this is the highest level where all these both businesses are actually very aligned on a majority of the aspect of the business, and they're very comfortable to work together. This is a journey, I believe, that is mostly built on trust. It is built on aligned goals. It is also built on innovation, because business require innovation. You require readjustment. You require to align with your partner, and at some point, the highest level of this partnership becomes something that each business feels that I really find my partner as a complement, and probably I'm very comfortable. I can trust with them. I can be able to truly even put my future investment or even my future plan for the business. I can actually rely with this partner. So I said most of the time it depends on the level of the business where you are. I believe that big corporations and big companies, of course, that have are strong in the market, will be able to to do strong partnership very fast. They can be able to articulate those benefits, and probably most of the partners that are also looking for this partnership can be able to clearly see the value that they can derive from these businesses. But of course, small businesses, startups, just as autonomous startups, we have our own challenges, right? You're even trying to align your vision. You're trying to align your business. You're trying to align your operation. So this aspect also plays with the partner, because if the partner comes and everything is not very clear from where you sit, then it is not very clear from the partner. But when the business is more established, everything is very clear in terms of goals, strategy, then it also has very strong clarity on the partner. So finally, I just want to share a quick aspect of how I would look at the different partners maybe along your business. There could be maybe some partners that might be missing here. But when I look at mostly farmers or the space where you're dealing with farmers, and I know there's probably a different business model here. Each and every business partner has a specific requirement, and this is very important for everyone to really understand What is the what do they care about? What does the other partner want? What is their need, and how does my partnership that I bring on the table serve that purpose? So when you look at the off-takers, when you look at the agri-tech companies or even cooperative, each and every partner has a different demand. It's very important for you to understand what is their pain, and how does my partnership address their pain, whether part of it or all of it, and does the part that my partnership, my business provide enough? Because if this solution that I bring is more valuable, it is likely that the partner will appreciate my partnership and will also be willing to put the effort that are required to retain this partnership. So when you look at for example, of takers, as I gave an example of one of the partners that we just I crossed the partnership as a processor. As I said, one of the biggest challenges is consistency of, for example, the milk. And this is a big problem for everyone in that sector. So how does this partnership help me address that challenge? That is a very strong value proposition for them. And this will actually not just establish. I'm sure it took some time, but it also, the fact that it is very very valuable for them actually accelerated the process as well. When you look at the agri-tech companies, most of them also care about data. How do I access data? How do I access potential customers, right? How do I reach to my audience? If you have end user consumer, depending on whether it's your customer, how do I access my customer data, and how can I leverage on that customer data? So when you are engaging such kind of an organization, you really need to ask yourself whether your business bring this solution, or how it can actually be able to bring this solution to them. And as I said, also for others like cooperative, farmer loyalty sticking and all that. So I think that the core aspect is for you to ask yourself is, what value does my business bring to the other partner? Of course, if you are sitting down to evaluate a partner, or if you are approaching a partner, I want to believe that you have been able to pinpoint leverage and benefit that you can get from that partner. But then you need to ask yourself, how do I tailor my proposition so that when I am engaging to this farmer or this organization or this specific institution, how do I communicate this value to them? Because that's what really matters most. So yeah, so the last one here is I just took a few, and I know probably you're definitely aware of this successful. Most of you are in the Agri-Insurance, so you are aware of the Apollo Agriculture, Pula. These are some of I would consider some of the most successful Agri-Insurance companies that are working with the smallholder farmers. My understanding is that these organizations have really leveraged on partnership. They might not have direct contact with the farmer, or they didn't have, but I know most of them have direct contact. They can actually directly now link to farmers. They pride themselves of having access to millions of farmers. And then you ask yourself, how did they reach out to millions of farmers? The impact they have done, whether it is in terms of financing, or it's in terms of insurance impact, how did they go to that level? I believe, and I know that majority of them really leveraged on partnership, and not just partnership, but also asking themselves, how do we deliver value, whether it is a single product or it's a bundled product, and how do we leverage on other partners in this process? Because having access to millions of farmers, maybe hundreds of millions of farmers, which is a very good milestone and a very good deliverable and impact to actually mention, it's not an easy task to actually achieve as a single organization. It requires a lot of collaboration, and we know that Apollo Agriculture has worked very closely with agro dealers or distributors. Not just Apollo Agriculture. Even when we look at other business case model, even of the big tech companies, telecom companies like Safaricom, you can imagine the number of agents that Safaricom has and the number of transactions that happens on a daily basis through this distribution or through this channel. And, this is a very, from where I see it, it's a very, very critical aspect of, of partnership. It has a lot of work when you look at the scale, at the size of the unit, because the more unit of partnership you create, small units of partnership within your partnership, it has more work in terms of managing. Sometimes bigger partnerships, contracting an aggregator or contracting an organization that later create this small distribution is easier for you as a business. But when you look at also, the agent models like either Safaricom or, agro dealers as we have them, is a very strong tool that can actually scale your business. Of course, it need to be, you need to provide infrastructures, mostly like technology, because when you look at most of these, distributors, if I would say so, majority of them are not really driven by technology. Either they have not invested on systems that can help you to leverage on. And I understand that majority of the business, the power that you have is the data that you have. So how do you, as an organization, work with distribution channels, but still have access to these markets or to this end consumer or to this data? Because this data is power. It's data, information is power, and this data can actually is very strategic for you in terms of growth. How do you bundle? How do you bring different aspects in between? And we know that Apollo Agriculture, beside providing extension and knowledge on agriculture, then bundles in different aspect of the business. For example, what you're doing as an insurance company, providing insurance to agriculture or other businesses. Then you definitely have an opportunity in organizations that are working directly with farmers. And for example, if you are today, just giving a very simple example, if today you are an insurance company, you make a partnership with maybe, I don't know, 5 major processors in your country that have direct access to, 100,000 of farmers or customers, then you are able to directly deliver your solution to 1 million customers, within a very short time, as you'd actually compare if you are doing organic growth or even organic expansion. So, of course, partnership is also important. Capital, and this is one of the most important aspects of businesses, is to be able to raise fund. So then, how does your organization, raise finances? Because this is also very, very important. Again, partnerships, require investment. If you partner, with an institution that has a big reach, has millions of customers, and you want to offer service, then you must be in a position to be able to provide that service. So how do you raise resources? How do you put together your resources to be able to grow together with the partnership? And I'm sure this is something that you probably know better than me, or you're already working on in terms of raising finances. So Pula is definitely leveraged on partnership. We know they do a lot of fundraising. There's definitely a lot of aligning on a government organization. One of my experience also is whether it's development partners that you work with. Philip mentioned that he's working with GIZ. And others another project that you might actually apply. They are very, very critical in business. Besides maybe the direct financial benefit that you might get, they also bring a lot of credibility in your business. And they're also very, very good also even in providing some support, some technical support, some financing that can also help you to grow. But also in terms of growth, we see that technology technology has been very critical in if we are just taking these two examples. How do you use technology to leverage and to grow your business? Because we know that technology, bring efficiency. Technology, whether it's in terms of customer reaching out or in terms of doing your business. How does your business leverage on technology to be able to even grow and also to leverage on the partnership that are there? For example, what I said about these agents. So, for example, I know of a financial partner that wanted to grow or to actually onboard to create, let's say, to do the customer acquisition on the small scale farmers, and they created a system that helps the cooperatives, which are the partners, to be able to purchase the produce. So they provided the solution for free, to the societies or the cooperatives. And they're able to use it to be able to purchase the produce and send reports to them, and also the farmer receives a daily report on how much they have actually delivered. And this technology is helping this financial institution also even to be able to assess this farmer in terms of credibility and also ability to actually pay and also finance them. So this is also another example where you'll see a bank, a financial institution, create a solution, a digital solution that is not necessary for them. It's really driven and it has a direct value to the to the aggregator, but it also has, because it's technology based, it actually has a direct benefit to them, because they are able to access, they are able to learn, they are able to even to onboard farmers and also even to access the farmers and even target them for the different product in the bank. But what I can say is in common is how do you reach out to your partner, or how do you reach out to your end consumer with a bundled solution, with not just you as an individual, not as a silo product going all the way, but that how does your product complement with other product and even arrive to the farmer as a higher value proposition. Imagining a farmer who, for example, just give an example of a farmer who get a financing for, let's say, a cow, for example, or a cow shed or something like that, but it also comes with more support, right? It comes with extension support because you're working with a Pula or another organization that works directly with the farmer. It comes with financing and insurance support, for example, because you're gonna insure the animal directly. And this is, the farmer is not dealing with so many providers. Is actually getting this as one bundled product that comes from them. So I believe that being able to understand your partner and also being able to see how you can leverage directly, and also how you can actually bundle or even combine and complement your solution with the others, and also how it also increases value to the end consumer that you're actually targeting, is very critical. So I just took Trigger Food as an example. I believe for me they had a challenge in the market. Probably might have other organizations. But Trigger Foods, we know it raised a lot of money. It created, there was a lot of hype about their business model. But I would say that without fear that they actually failed terribly in the market. And they had also worked on they were trying to work on a partnership. So I would say yes, they engaged farm organization, for example, how farmers are organized. They tried to aggregate markets, basically as a market for the farmers. But one of the things that I think to date I struggled to understand about Trigger, that is my personal perspective, is a business model. What was their real value proposition? Like what value are they actually bringing to their partners or to their customers? So whether it is the farmer, for example, that they're actually taking from, what was the real value proposition that the farmer was getting, and why would a farmer actually continue supplying to Trigger and not supply to any other, to their normal markets or even any other new market that will come? My thoughts, these are my thoughts, are that I think that the value was not very strong, the value proposition. For me, it was just either aggregating and creating a time, just creating a place utility, just, removing a product from point A to point Z and making it available to maybe, other businesses and other partners. Of course, it could have created conveniency, which is also a value, but is it strong enough to maintain the level of the business? Of course, there was a lot of an expansion, and a lot of the whole thing was not very clear. Do they buy directly from the farmer? Do they aggregate the cooperatives and buy as one? I know to an extent sometimes they created markets. They created digital markets where you could actually, as a farmer, go and deliver your produce, and they can weigh and they have the price. And this also distorted also the way that market work, because normally how that market would work, probably there are some traders in between, there are some local markets that also buys the product. How does their business model, as much as it distract that, is it strong enough to actually withstand those challenges? There were the issues of investment, and for me also strong enough is like their business model and how it was really based, a lot of investment, vehicles, and all those kind of operation that I believe could be also be very, very extensive and very chaotic, could also lead to many things. But definitely we know that the real value, if I was really looking at how does this produce, for example, bananas, for example, if they're buying bananas from the village, what is the actual value? What is the margin? What is the break-even point? Just going to the basics of the business. How do you end up with a strong strong business? How do you create how do you create something that is commercially viable? It's something that I personally struggle to understand. Also at the level of the business that they were actually creating. It is possible for small businesses, for people that can actually, but to the extent of the level of investment and the level of operation that they created, they were not able to really create very, very strong business model. And I want to believe it has a lot to do with partnership. I want to believe probably me and you, given a difference, we could probably have done something different. But when I'm looking at one of the things that could have done different mostly is about the partnership. So how do I partner, or how do I actually leverage on what is already existing? I can't go to the market. You can be a market disruptor. It's okay. You can actually disrupt the market, but you need to ask yourself very critical questions. Even when you think that you can actually disrupt the market, you really need to ask yourself first on either how you can leverage on the existing structure. Can they be a leverage to you in the first place? And if not, then what need to be done? What is the gap that is actually there? And and also outgrowing. I think also they also outgrew. Probably outgrew the business that they were actually creating. Because when you look at the consumer product, less the vegetables or the kind of things, the raw product they were dealing with, I'm sure it has some level of limitation in terms of how much you can actually take to this kind of market. It's fresh produce. How do you deal with it? Partnership, probably like processors or other agro processors, could have strengthened their business, where probably a bigger portion of their of their product are actually channeled toward big processors, food processors, whether it's locally or externally. But I believe that they created very weak, from what I understand, very weak partnership. Directly distributing to maybe even small kiosks. Here in Kenya, we call them kiosks, like small shops that have very small uptick, and this also had a very high operation cost. So, and of course, this also comes with a lot of high expenditure, high burn rate, and the whole operation was very, very capital intensive. So it's possible that they were very successful in raising a lot of money, but they were not successful in building sustainable business. Now that is the tragedy, that you might be able to work very hard, raise funds, build a model, something that can be presented, something that can be acceptable, something that can raise money. but is it really sustainable when it's put in the test, when it goes to the market? Can it really serve and survive and become a sustainable business that actually exists? So these are some of the few cases. I'm sure you might have a little bit more cases, but these are some of the ones that I thought could be relevant to share today. Maybe one of the exercises that we can do, if I think we still have like 10-15 minutes remaining, is to hear from you. I don't know, you probably might have been, I'm sure you probably are in developing any partnership, or you're already running one. And it would be good to hear if any of you have an example of a partnership that you're working with, or a successful one, because I want us to try and come up with how would we create a scorecard for a successful partnership? What are the main critical aspects that we believe, based on what we have gone through today, are the key aspect? Even how much would we actually value and rate those specific aspects of partnership? And it will be interesting to hear if any of you here have an example of a successful partnership that you can actually share, or a challenging one, or a failed one. And we can take the next 5 minutes to really ask ourselves whether what was the issue, and whether when you look at we want to create a scorecard and look at the different elements, what would actually have made a difference. Was there some some miss from the beginning? Was it really the right partnership that you created? Are you suffering operational challenges, implementation? It would be very interesting to hear. Any volunteer, anyone who has something that he can share, it would be very insightful. Yeah, I was asking if there is anyone who wishes to share something, any experience with the partnership. It could be a good experience, could be a bad one. We are here to learn. And you don't have to be very specific. You can be very general. I hope I tried to be very general in my examples.
I'm happy to share. It's primarily planned as we're new to the market here in Somalia. I'm Sophia Rogel from Metro Africa.
Yes, Sophia.
Hi. So in terms of planned partnerships, there are the exploratory phase, you could say. So that would be with the different government bodies, but also potential service providers. It might be, I'm not sure whether it's a similar experience in other parts of Africa, but one of the biggest issues here in Somalia is an issue of communication. So even if we are aligned in terms of shared value, and in theory it's a win-win, one of the biggest issues we come across is communication challenges, and it's not about linguistics because I also speak Somali, but yeah, and just moving things in a timely manner. I don't know if that was helpful, but that's been my experience.
All right. So if I understand you, Sophia, I say it's basically aligning communications in terms of what expectations could be, in terms of expectations, could be in terms of timely communication, right? In terms of open communication as well. Because you're saying it's not linguistic, right? You guys can align on the communication.
Yeah, so in terms of I speak Somali, they speak Somali, that's not the issue. But it's just I think maybe the ways of working here in Somalia is not as structured or professional, and so often requires a lot of follow-up, but with persistence, we do believe that it will be fruitful for all, but it does require, yeah.
Yeah. Okay. Great. Yeah, so it will be interesting to learn a little bit more. But from my seat, I can say that when I look at communication, and mostly communication also includes sharing information, and not just sharing, also timely sharing of information. What I find sometimes also challenging to align, I also find it in the current partnership I'm doing right now, is that from organizations, you might have a team that is quick, response faster, right? And mostly, startups and the kind of organization we are working with are able to respond fast. We are lean organization. We're able to do faster, and probably teams with even less structures in organization, things move faster. But you find organizations that have been there for the last 30 years, government organizations. They have a very, very long and very bureaucratic way of communication. So, and probably it's the same case in Somalia government. In Kenya today, if I want to communicate to the government, most of the time I have to write letters and deliver, hard copy letters to the offices, get stamps, and this is one of the ways also that delays communication. But what I have learned also is to, most of the time when I'm working with partners that are a bit more flexible, is to be able to align them with probably our more efficient ways of communication. I'll give you an example of the partnership that we have worked with, and one of them that I just mentioned recently. So when we are communicating about whether it's a business aspect, they will send you an email. They will send you hundreds of emails. Like, they can initiate any email for every communication they are doing, right? Or even create an email thread. As much as you want to, this can be a way of communicating. It's a more collaborative way of communicating. So some of the things that we do sometimes is to create a collaborative working space, maybe a shared document, a shared live document, something that is very accessible to them. It doesn't mean that all the time these people will actually get into. Sometimes they will ask us information that's already updated in that document, but it's a way of us also trying to support them to adopt more effective communication channels that also fast track and accelerate the project and the partnership output. So maybe those are some of the things that you could explore and ask yourself, what is enabling my organization to be effective in communication? Are there tools? Are there channels? By our partners? And if yes, then you can support them to do that adoption. And for us, we do training, we initiate, we are very proactive. We say we're going to initiate this this communication, initiate this tool, and we are very, very happy and willing to train you and train your team so that we can increase the collaboration. Yeah.
Thank you.
Yeah. Thank you, Safia, for sharing. Anyone else? Okay, so I think I want to end the conversation and this session there. I want to welcome any open question. I know there's this request from Philip about a framework, whether it's a partnership a framework, and how you can actually manage a partnership. This is something that I can share as a follow-up. It's not something that I had prepared, but it's something that I wanted us to take from here and try to develop it on ourselves. I think the issue of a partnership scorecard, it's something that I can share here, but I want to request you, based on what we have gone through today, what are the aspects that you consider very, very important for a successful partnership? And if you can just pick even 5 of them, not just all the 10 or the 5 or the 7, how can you actually rate a score each of those aspects in terms of importance and how they can support your partnership success? And then you can actually rate them so that when you are looking at any partnership or a desired partnership, I want to believe all of us, including myself, I have desired partnership that I want to create. How do I rate this partner based on this very, very important aspect of a successful partnership? So this is something that I can ask you to build, but it's also something that I can share as a follow-up for this session. I'll also share a bit more framework on how you can be able to build. I think, Philip, if I got you right and you can correct me, you are referring to a framework that can help you to have a successful implementation, or are you referring to specifically the scorecard to identify and really map?
Yeah, what I was referring to is a tool that is almost similar to what we have in the version of a business model canvas that can be used within the C-suite and also with project teams, because at times some conversations on partnerships start at the grassroots level. So if that can be used to communicate that to the team at the ground, and also team members can always be in the lookout to build up to how the core team makes decisions on partnerships. I don't know if that is something you have in mind. I believe we can co-develop it and see what works for us in our context. Yeah.
Yeah, exactly. I think we can pick that and work together.
Okay, thanks.
All right. I guess we come to the end of our session. Unless there's any further question, I also want to believe that, and Andrew, you can confirm if I'm reachable to these leaders through the Bima Lab platform. But also my email is also available.
Hi, Daniel. Yes, I can confirm you're reachable. If you could send me your, I mean, I can, if with your permission, I can also send the cohort your slides, especially the ones who've attended this session. So I know you're reachable, and we will be, yes, and also on the Bima Lab platform, you can interact.
All right. Thank you very much, Andrew. Thank you, everyone, for attending. I will hope that the session was insightful. Please feel free to reach out to me directly, and for any question or anything that you'd want to do a follow-up and build up together, I'll be happy to support and work together.
Thank you so much, Daniel. We appreciate. It's been a really good session. I've picked a thing or two, and I know we shall be in communication. And thank you for attending the session, and we look forward to having you again.
Thank you.
Thank you. Bye.
Bye.
Thank you. Bye.
Thank you. Have a good night.